Covered call ETFs have a bad rap. However, they do have a place in some people's portfolios. I hold some in my portfolio, and today's video I'm going to show you which ones I hold and which ones I've gotten rid of from the past year of my investing journey. But of course, before we do that, we're going to check out my portfolio. We're going to look at the metrics, see how it's performing. We're going to buy some stocks, and we're going to look at the dividends that we earned since the last video that I posted. My name's Darren. This is the Crazy Canuck Investor, where I try to make investing a little bit easier for beginners. Because let's face it, there's nothing that gets you ready for that first day of your investing journey. And I do it by sharing my journey with all the ups and downs along the way. Now let's talk about that a little deeper, because I was reading some posts on Blossom today. If you're not familiar with Blossom, I'll put something up on the screen here to link it. It's a great app, a great place to go, essentially social media online for investors. Now, this chat essentially was saying that anybody that's an influencer or that's trying to provide guidance to people out there in the investing world might be steering people in the wrong direction. And I want to make something clear about my channel. My channel is not about me providing you with guidance. It's just simply sharing my journey. And if you can take something away from either the good things that I do or the mistakes that I make, then I think that I'm doing what I set out to do. All right, so first thing we're going to do is we're going to talk about a video. I've been doing this in a few of the videos, and I hope some of you appreciate it or have been watching some of the videos that I've been recommending. This week's Netflix video is called The Stranger. This is an 8-part series on Netflix. It is produced in England. The show is all about secrets, and trust me, there are lots of twists and turns that keep you on the edge of your seat. My wife and I, we were just chomping at the bit to watch each and every time. Now, it does say that it's season 1, so who knows, there could be another season coming out. On to hockey, of course. I saw a comment that mentioned Go Oilers Go. While I'm not necessarily a huge hockey fan, it is wonderful that the Edmonton Oilers have forced Game 7 in the Stanley Cup playoffs. So I think for all of us in Canada, we'll probably be cheering for the Oilers. Go Oilers, go. All right, let's jump over the portfolio and check things out and see how it's doing. All right, so the portfolio is up to $145,637. My account's made up of 4 separate accounts: cash account, TFSA, RRSP, and my kids' RESP. The cash account currently has $33,517. Now, if you don't have a cash account, that's not necessarily the most important thing here. What is important that you have a treasure chest or an emergency fund. If you don't have an emergency fund, it doesn't really make a lot of sense to get investing, because what if you have a rainy day where you need some money, but all of a sudden it's invested in the stock market? So if you don't have an emergency fund, I would highly suggest you get one set up. If you do, great. Good place to keep some money. Now, I use Wealthsimple's cash account because I get 5% interest. So that money just sits in there, earns some interest, and then I take that interest, because it is taxable, and I fire it on over to a spousal account that I have in my wife's name. I get the tax credit for it, and therefore that interest doesn't become a bit of a burden on me. All right, so let's jump over into the kids' RESP. Now, if you have kids and you don't have an RESP, I would suggest you get one set up. It doesn't really matter which broker you use. In my case, I'm using Wealthsimple, and the reason I do it is it's easy, because when you have over $100,000 with Wealthsimple, you become a premium client, and then you get the benefits of that, and there are several of them. In this case, our kids' RESP, or Registered Education Savings Plan, is up to $65,303. It is all-time up 16%. Now, something I noticed that they updated recently in this account is they can show you, or they're showing what you're invested in by the various different markets. And so here we see on the screen the different areas that we're invested in as far as our asset allocation. So we have US equities at 29%, so that's roughly 30%. We have international equities at 22%. And then we have emerging markets, that's at 15%. And of course, in each section, it shows you what the ticker symbol is and how much it's increased over time. In the Canadian side, we have 10%, and you can see here it shows performance which is up quite significantly as well. Now, overall, when you average this together, of course, you get about 16% increase over time. It is the best performing portfolio or part of my portfolio that I have. So here it shows our net deposits. We put in $55,990. We have a total return, and this is just over 1 year. I started in April of 2023 of $9,000. Here down at the bottom, you're going to see the activity tracker that shows what's been going on in the account day by day. So I always go back to the last time I posted a video. And you can see here, since the last video I posted, there were a couple of deposits. That's every 2 weeks, we're depositing $100 for our daughter and $100 for our son. And you get a government grant that matches that. All right, let's jump over into my RRSP. Now, I'm not putting money in this. So for the day, we're down $32. The markets seem to be trending down a little bit. Totally normal, gonna go up and down. Over the week, it's down $99.28. But I've also seen it go up, so that's not something that I'm worrying about right now. Over the month, we're down $59.50. And coming up to the 3 month, we're up $415. And then over the last year, we're up $1,979. And I did readjust this particular account a little while ago, adding in some small cap funds. So go back, check out some videos and see where I made those changes. All time, this account is up $1,907. There's no cash in it. Well, okay, there's 1 cent US that we can invest. All right, as far as dividends go in this account, we earned 47 cents with VRE, HYLD.U 252, HYLD paid out $11.30, EIT paid out $8.60, CAR-UN 60 cents, Plaza REIT 19 cents. And all of those are on DRIP, which means it's being reinvested back into those. I don't have to do anything. I just switched it on and boom, it's being reinvested. Into the TFSA, we're up to $29,534. It's down $24 on the day. On the week, this account is down $100.98. Over the past month, it's up $36.87. And over the last 3 months, it is up $704.92. And over the last year, this account is up $2,960, which is 11%. And all-time returns, $2,987, which is also 11%. So not too shabby, considering I've only been at this for about 14 months. Right now, we only have 35 cents in there. I do have stock lending turned on. And each month, this amount does seem to grow, although it is a incredibly small amount. You can see I've only earned like 59 cents since I turned it on, but that's 59 cents that I wouldn't have previously had it, so I'm game for that. So you can see here where the earnings have been. And it also will tell you what different stocks are on loan to other people. All right, to the magic of editing, of course, we're going to chuck in my $1,000 that we invest every week. And then we're going to go ahead and jump over to passive and look at what stocks we're going to buy because we're using asset allocation. Now, remember, passive is the tool that I'm using to track all the dividends, to track each part of the portfolio. And of course, in that program, it also allows me to set an asset allocation, how much of each, just like I showed you in my RESP. So we're 89% accurate. We added the $1,000 that we have to invest, making the account $30,547. So we're slowly growing this account over time. All right, so we are going to buy 10 units of Plaza REIT, 1 of QQC, that's the NASDAQ 100. We're going to buy 4 shares of REI, which is RioCan. We're going to buy 5 shares of VRE. We're going to buy 4 shares of XEC. And we're going to buy 10 shares of XEF. And then lastly, we're going to buy, second to last, 1 share of XEI. And finally, we're going to buy 6 shares of XIC. Now, the reason that I'm doing this is I set an asset allocation. So that would mean that I might say that I want 30% invested in this case would be VFV. And as I add money to my account, the program looks and says, based on the amount of money, here's what you should buy to maintain that asset allocation as your account grows. All right, so now we're going to jump over and we're going to look at the dividends that we earned since the last video that I posted in our tax-free savings account. Since the last video that I posted, there's only been one dividend that paid out, and that was Plaza REIT. And you can see here on the screen that I don't hold a great deal of that, so the dividend's pretty small right now. But it will continue to grow because we're going to keep adding to this position over time. Remember that the goal of this channel is for me to grow my TFSA and max it out. But of course, I have all these other accounts that are associated to my Wealthsimple account, and I want to share those for transparency purposes so you can see where the money flows from and into the account that I'm doing the majority of investing in. I did start a monthly update on my entire portfolio. And the reason for that is that the accounts are intertwined. I have a way of tracking all of my asset allocation across all of the accounts, and I make purchases based on the weighting across all of the accounts. But of course, the feature of this channel is so that you can see a beginner start right from day one. So if you haven't seen, go all the way back to April 2023, and you can watch my first videos, which will undoubtedly provide you with undoubtedly a laugh, but you will also see the progression from day one. So if you're new to this channel and you're just getting started out, when I started out, that's what I did. I went and I watched other people and saw how they built up their portfolios. Now remember that this is not advice, of course. You need to do some of your own research, but I'm here to share with some transparency so that if you're getting started, hopefully I can get you pointed in the right direction so that you can get yourself investing. Because as I have pointed out in my early videos, if you haven't seen them, go back from the start. Go back to April of 2023 when I started my journey and watch the videos from the start and see how I've progressed from then until now. And you'll see all the different lessons that I've learned from the start till now. So at the beginning of the video, I told you that I was going to touch on some of the covered calls that I hold in my portfolio. And so we're going to jump right into things, and I'll start talking about the ones that I hold. So here we are in my portfolio, and you can see that the first one is HYLD. Now I do hold this in Canadian funds and US funds, but here in the main portfolio that I'm highlighting on the channel, I hold it in Canadian funds. And you can see here that I have 59 shares of it. It's a very small holding within my portfolio for now. One of the beauties of a covered call strategy is that you get monthly distributions, meaning that there's money coming back to you in your account that is usable, whether you reinvest it or take it out and use it. In my little experience, it seems to me that this type of strategy be really good for those people that need some kind of income stream. Maybe you're younger and for whatever reason you still want to stay invested, and the GIC, say at 3 to 5%, that only pays out annually isn't going to be good enough. You want something paying you monthly but keeping your money in the stock market. This might be a good strategy for that. Or if you're retired, of course, and you're looking for that monthly income. Now, the downside to a covered call is that you aren't going to see any growth in that fund. So essentially, they're taking the growth part and giving it back to you to do what you like. At my age, I'm only 51. I have about 9 more years before I retire. So for me, I can just turn around and reinvest this. Now, HYLD has actually been performing really well. So here's some key points about HYLD. It yields 13%. And you'll hear quite often people talking about the yield of a stock. In other words, how much money is coming back to you based on a percentage. So this one is not the highest, but it's certainly not the lowest. I would consider it somewhere in the middle. And of course, that is monthly. So if we scroll down here, we can see that it currently is trading for $13.60. That price has gone up a little bit over time, which is not the norm for coverage calls, at least in my little bit of experience that I have. I think when I bought into it, it was somewhere around the $12 mark, and it's definitely slowly crept up, where I've seen some gains or upside on the actual stock price. And of course, each month they change the distribution or the payout, so that money might be going up or down every month to come back and pay you your distributions. Here's the sector allocation within this particular ETF. You have technology, healthcare, consumer discretionary, financials, communication, industry, so on and so forth. And you can see that the highest weighting in percentage within the sector allocation is technology, which shouldn't be much of a surprise. So here's the breakdown of what's held within this particular ETF. So you invest in HYLD, and then they turn around and invest that into SMAX, QMAX, LMAX, FMAX, AMAX, EMAX, and HB and D. And you can see that there's different weightings, again, based on how much makeup they want to make within that particular ETF. So this particular fund has $576 million in Canadian funds. As I said, its annualized yield is 13.11%. It pays out monthly. And for this one, you can hold it in just about every account, your RRSP, your RRIF, if you have one of those, a DPSP, which would be a disability one, RDSP, FHSA, RESP, TFSA. So you can hold it in all of the different accounts. And of course, they're all designed for drip. To maximize this particular ETF, of course, reinvesting the money back into the fund itself is going to give you your biggest returns, or at least that's how I see it. Now, initially when I started investing, I was holding a number of covered calls, but I narrowed that down to 3. And so within my TFSA, I only hold HYLD currently. In the other accounts, I do hold other covered calls, which I will touch on my monthly update, which will be coming up probably in the next week or two when I do the entire monthly update for the whole portfolio. Now, one covered call that I did hold in here was HDIF. And if we go back to Hamilton's page, you can actually see it's referenced. There's HDIF, HDIV. There are different ones that Hamilton holds. And I eliminated those and brought it down to just HYLD. Okay, so for now, that's the only covered call I hold in this one. Stand by for my monthly update when I'll talk about the other covered calls that I have within the entire portfolio. If you made it this far in the video, thanks very much for watching. Really appreciate it. If you don't know, I have all the links down in the description. So if you're interested in getting started with Blossom Social, you can follow me there. There's a link in the description where you can find that information. And so that's real time when I'm trading. You'll see it real time. If you're interested in supporting the channel, I do have in the video description below a link to buy me a coffee, and I'll put it up here on the screen. I do have to put a fair bit of effort in. And remember, I'm doing this on the side. So I'm a regular Joe with a job during my regular day, a dad and a husband, and then I do this. In fact, my wife is currently out, and so I locked myself in a room to shoot this video real quick for you guys. So buy me a coffee. That helps support the channel. The channel's not monetized, although I am super stoked. I did put a community post out. I asked, or I challenged to see if we could get to 500 subscribers, and man, you guys came through. I am super stoked about that. We, as of filming today, about an hour ago, 506. So I got one more subscriber. That's absolutely fantastic. I know there's a lot of people that are watching the channel that aren't subscribed. So if you do have a moment to hit that subscribe button, it would be great. Don't forget to smash the like and share it with other people so you can get the word out to other beginners out there. So lastly, I'll say that I actually am really enjoying these videos because it helps me keep motivated in my investing journey as a whole. And obviously some people are actually getting something from me sharing. Remember, this is about me sharing. I'm not giving advice here. I just want you to learn from the things that I've experienced over time. And what I said before, if you don't know where to start, you should watch this playlist right here from start to finish. We'll see you guys in the next video.